anytime after 3, right? We're done.
Yeah.
Until there's a deal.
Until there's a deal.
And then it's 24/7.
Then it's like, all right, boys, what are you doing like Saturday? What are we doing Sunday? Speaking of which, we're looking at our first Class A deal right now. I'm surprised. I don't know.
You're online.
No?
Perfect.
I don't know.
We have to get silly money for that.
I do. Well, I'll tell you what. It's the first Class A deal.
How can you service the debt at a 3.5 cap?
Well, but it didn't start at 3.5 cap. That's and the rates are much lower for that type of asset. So
they have to be.
It's an interesting deal. So we'll see. We're supposed to get some more numbers back today, but yeah, I mean that's a big boy deal.
Yeah, for sure.
That's a big boy deal. I think they're talking. I'm talking to my contact that brought me the deal. He said, they're kind of stuck on 220, but I think ultimately where this thing's going to land is about 180. And I'm like, well, that would make a little bit more sense. Yeah. But basically, they need money for another project. So I'm like, well, if anybody can get it done, Mr. Texas Real Estate can get it done. At least I've got somebody in my net.
Really?
I got a guy.
You made that statement?
Yeah. Well,
wow. All right. Here we go.
All I said is I've got the guy.
We do. We have a guy with the silly money. Yep.
At $180 million, it's
it's not a problem.
I was like, those guys. In fact, every time we visit with them in California, they go, hey, you guys got a $100 million deal. We got another guy that needs to just put $100 million to work. And I'm like, no, but I got this $2 million deal in Corpus. Right. And they're like, yeah, we're not interested in that. I've got a hotel we're doing down in Surfside. They're like, yeah, we're not. $1 million didn't really get us out of bed in the morning. So I was like, okay, I'm starting to.
Isn't that crazy?
Well, it's I get it.
It is just so crazy as you get up that ladder, right?
Yeah.
I was so happy to get a $3,500 wholesale fee.
Well, I'll tell you the other thing too. It's that whole when you go through that change. When we closed that deal out in Edo a couple of weeks ago, and what we did on that deal, and then I started looking at a couple other deals that we did.
Now we see the blue Honda everywhere.
Yeah. That's a good way to put it. Yeah. It's when you buy that.
Buy the blue Honda Accord, and then you see the blue Honda Accord.
Yeah, the blue Honda Accord. It's everywhere.
It's
right?
everywhere. Yeah.
There's this amazing thing that you find what you're looking for, and now that I know what we're supposed to be looking for, I find it all over the place now.
Even a big one yesterday.
So that's pretty exciting. But we're hiring. We're bringing on some. We're growing. We're bringing on some new people. More new people.
Yeah, we have 3 positions, but let's go into a few things that's going to help you, the people that are listening, not you, Jason, but it'll also help you, Jason. When you are filling out your team, or if you already have an existing team, this is a big thing. I made a statement over the weekend in our little mastermind. I love this organization. There's an organization we were talking about. I absolutely love them. The problem is some of their employees don't love the organization. Right? So I'm like, wow, every time I'm around certain folks from this organization, I'm like, I don't feel any love like I do when these other representatives are there.
Oh, yeah.
Right? I'm not going to go into any deeper than that, right?
Right.
But Casey did an excellent little thing when he talked about sales and marketing and people that work, or just basically folks that work for you, right? There is the ego, right? The I. I did this. I did that. This is great. Look how good I am. Me.
Okay.
Me. I'm doing a Facebook post. Me. Right? And then there's the second level where it's like the product. Right? We've got the best. This is the best. We rock. This is absolutely just destroys. Best. Even though it's a commodity.
Right.
And then there's the third, which we, as owners of several organizations, need to be on constant vigilance for is service. Right? That third thing that we're always looking for is service. I don't want our salespeople talking about them. I want them talking about our customers. I don't want the folks that do Airbnb, right, talking about how great the bed is. I want them talking about how comfortable your sleep will be. And it's just a switch, right? It's just a little shift, but it's really, really big because you're going to find it in the employee's mindset. Jack Welch, Neutron Jack, right, says, hey, you've got skills and belief in the system, right? And there's a sort of, you can mix those two up 4 different ways. And he would say, it is so much easier for me to take someone who believes in the system but doesn't have the skills and train them up to have a good employee versus someone who comes in with the skills and doesn't believe in the system.
Oh, I agree with that 100%.
Right now, what GE did is they found people who didn't have the skills, who didn't believe in the system, and they immediately fired them. Just got rid of all of them.
Yeah, they call that rank and yank.
Yeah, just get them out. And then the people that were left over that had the skills and didn't believe, gave them 6 months.
Yep.
And if they didn't buy it in, they were gone too.
Yep.
And the people that had the belief and didn't have the skills, you gave a year. And it was so big with General Electric, he set up General Electric University.
Right, yeah.
Right? Push all these guys to the Six Sigma training. I mean, it was very serious. If you believed in the system, then you were going to spend a good portion of your life working for General Electric. Right? Now, everything is obviously fallen apart for that organization, but at the time was the #1 corporation in the entire world. It was #1, right?
And his vision was, if we're not 1 or 2 in an industry, we're getting rid of it. We're getting out.
Right. Toaster ovens, we're done. Irons, we're done.
Yeah.
Yep.
And which is phenomenal. Think about it.
Yeah. What was left?
Yeah,
nuclear power.
Yeah.
Right. It was like nuclear, not much. And financing. Right. They had a #1 consumer financing product, which carried their company for a very long time. So back to when you're building out your business and you're going to do some hiring, you need the skills, but you need the belief. They need to believe in the organization and believe in the team. When I hear people talking about my commission, what's my commission? How do I get paid?
Yeah.
Right? It's like, hey, we're serving these people. Right? You're going to get paid a lot of money if you just make an effort to serve everyone that Jason and I bring to you.
Yep.
Right? And so we've got some people that are absolutely loving it. Like for sure, Cindy and Linda are serving our mastermind folks, our members, and just people who hear us on the radio, just above and beyond what they are part of the 10 in that 90 to 10 ratio in real estate. And so we are blessed to have them on our team, right? And that's what we want. Hey, here comes, Joe Blow, and he wants to do a duplex, and they're on it, right?
Yeah, they're already making offers. Which one you want?
Right. Within a week, we got things under contract. We got inspections, and we're moving forward on all this stuff because they're serving Mr. Texas Real Estate, and they're serving those folks that come in. It's not about Cindy and Linda, right? That's a real distinction that everyone in your organization has to make, especially on the sales side. Right? Because you get cringy. You know exactly what I'm talking about. Hey, we're the biggest in the whole state. We're the biggest in the city. We're the best. We're the best. I crush it. Da 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 da. We've got the best product. We got the best product. We got the best product. We got the best product. And it's like, wait a minute. What about me?
Yeah. What about
serving the people that are lining up?
This is I'll tell you where this shows up when I would go to these seminars, these weekend real estate seminars, is you're standing there or you're sitting there, and the first 10 slides on the Saturday morning is this guy's picture of his family and the big house and the Lambos and the Ferraris and all.
I like that slide with the Disney.
Yeah.
There's always a Disney.
There's always a Disney thing in there. Oh, we go to Disney every 10 minutes, right? It's all of this stuff, and you're sitting there in your seat, and you're like, well, I wouldn't be
20 minutes into the slide deck. You're like, okay.
Yeah, we're like, we got it. You're a rich guy. And I'm like, well, that's what we're here for. Yeah. Like, we're here to learn how to do. Why is it?
I used to do I was like, hey, this is the obligatory wife, pet, and Disney slide.
Yeah.
And then I move on.
And you go, this is like, I'm required by law to share this.
Required by law because I do real estate education. This is my wife, my pet, and Disney.
Yeah, this episode's going to be recorded kind of
house.
obscure.
That's fine. Like a regular old house. I used to complain.
So whenever he sends it to you, he's not going to have this segment.
This is how we live. I'm like, that's a dump. That's $25 a square foot. Oh, I know you're from Oklahoma, dude. That's a dump in Oklahoma. Trust me.
What's so funny is they're going through the slide deck, and the whole time I'm sitting there, I'm like, why aren't you showing pictures of your students?
Nobody needs to hear that, right? It's about serving you, the audience, and the folks out there.
Yeah.
Hey, we're going to come back here. This is the Texas Real Estate Radio Network. We are hiring.
Can you turn me up just a little bit here? Yeah. Since 1964, Dow Pipe and Fence Supply in Pasadena has provided
Which one are you
commercial
on?
galvanized
I'm
pipe,
on,
chain link fence, ornamental fence,
5.
and wood fence materials to builders and contractors. That's 55
There we go. That'll work.
years.
Turn it down just a little bit.
Branch, fabrication, electrical, building erecting,
Oh.
concrete,
It's either like off or on.
713
That's way too loud.
1414 has the largest inventory of fence
Down just a little bit.
Southeast Texas. Vinyl coated chain link fence in various colors, custom gates of any size, swing or rolling, cane fence for the ranching industry.
Yeah, that's fine right there.
9 feet in height. Maximum security fence where safety
Those
is
pots are
absolutely
weird.
demanded. Commercial gate operators, access control, keypads, loops, card readers, and remotes too. Call 713-920-1414.
Morning, everybody.
Staff walk you through your project. Dow Pipe and Fence serves customers throughout Texas and Louisiana. Trailer load or truckload, dial 713-920-1414. Dow Pipe and Fence shares your Texas spirit and honors your Texas values with old school service and state-of-the-art materials. 713-920-1414.
Dish TV is better than cable TV. Why? Because you can save 45% on packages compared to your high-priced cable bill. Wow. Take those giant scissors out and cut the cable and save with Dish TV. Plus, you get a free DVR upgrade to record your favorite shows and free installation. And with Dish Anywhere, you can watch TV for free on your mobile device. Act fast. You can save hundreds of dollars. Does your cable company do that for you? I don't think so. Get all the best TV programming at your fingertips at a fraction of the price of cable TV. So say adios, arrivederci, goodbye to the high cable bill and save up to 45% on Dish TV packages today. These are limited time offers and can change at any time. Call fast. 800-344-2066. 800-344-2066. 800-344-2066. That's 800-344-2066.
Welcome to the show. Jason Bible, Texas Real Estate Radio Network. Everybody's freaking out. It's raining outside. No, it's raining. Welcome to the show. Today, I want to talk about what big money is doing in real estate. Over the past 2 weeks, Blackstone has come out and added another $20 billion to one of their funds. They are the largest single-family homeowner in the United States. Now, $20 billion sounds like a lot of money. To give you some context, single-family real estate is a $300 trillion marketplace. 300 trillion. It's a huge number. So Blackstone opens up another one of their funds, which I believe they started in 2015, 2016. They added another $20 billion into the fund to go buy real estate. Now, this sounds like a really big number, but $250,000 houses, which the last time I looked at their portfolio, they valued the houses at about $200,000 each. 20 billion is, I don't know, 80, 90,000 houses. It's not a whole lot. Sounds like a lot, but it's not a whole lot. That's essentially a year's worth of inventory in Houston, Texas. And there's a whole lot of country outside of Houston. But the big money is still in real estate. And I'll tell you, I'll go back to what I mentioned in October about this time last year. And that is, as interest rates decline, you will continue to see more and more money pour into real estate. That there's no doubt about it. One of the most fascinating things I read in the last couple of weeks is how much money the United States printed versus China. Or as Trump would say, China. It's a massive amount of money. United States printed out 3-4 trillion bucks. China essentially flushed their system with $15.2 million, the equivalent of $15.2 million, or 15.2, I'm sorry, trillion dollars. $15 trillion. That's just sloshing around in the system somewhere. And everyone's starting to look around in those emerging markets, which China's, I guess you can consider it an emerging market. They're looking around and going, I don't know if this is such a great place to invest anymore. And those dollars are being brought here to the United States. Some are being brought through funds. Some are coming through family offices. Some are coming through private equity. Some are just coming through straight, an LLC that then just goes out and starts buying a whole bunch of real estate. There's a ton of money that's coming into this market. It's flooding into this market. And I get it. Everyone's looking for the crash. When's the crash? There's a big crash coming. I was thinking about a couple of buddies of mine that I met in 2014. Big time apartment investors. Big time. Tens of thousands of units. And they were in the process of liquidating everything starting in 2012. So I'd met them 2 years into this process. They were liquidating all of their portfolio. They finished by about 15, early 16. They had stopped buying apartments in 2012. And at the time, it sounded like a really great idea. Everybody was saying, there might be stagflation. There's a crash coming. Interest rates are going up. So when we refinance these things, it's going to cost us a heck of a lot more money. Of course, Donald Trump would be elected and the whole economy would crash. Boy, how funny that little prediction was, huh? I was chatting with a buddy of mine last week. He's a commercial real estate broker. And I said, how do you make heads or tails of these big deals? Going in and buying a Class A apartment complex at a 4 cap. Maybe if you get a deal, 4.5 cap. How do you make heads or tails of this thing with interest rates where they are? What happens when you have to refinance? What's going to happen to leases? Really, there's a lot of unknowns out there. And when the margins are this tight, how do you make a prudent investment decision? And he says, you know what you got to do? You just sit down and look at it. You just look at, hey, is this thing cash flow today? What risk are we willing to take? If there's a 10% correction in leases, how is that going to impact my business? What about occupancy? At what point am I at break even? And he said, then you just got to go for it, because the problem is that you can overanalyze these markets. And I run into so many people. I said, Jason, the crash is coming. I'm just going to wait until the crash. I'm just going to wait until the crash. What's fascinating is when you study real estate cycles, not recession cycles, but real estate cycles. Real estate cycles are about every 18 to 20 years. So we're only about halfway into our current real estate cycle. Now, if you're a developer in Southern California, I was reading about a developer this morning in Vancouver. If you're in some of these other markets, it's a little bit different. But down here in Texas, it's a good 18, 19, 20-year cycle. So you got a lot of people that are just sitting here waiting. But the problem is, if we don't see another downturn, at least a slowdown in the real estate market in the next 10 years, you've got 10 years of 5% a year appreciation. That's a lot of equity by the time the next, quote, crash happens. You can take a 50% haircut in 10 years and still be positive equity and positive cash flow. But everybody's waiting. But then when I look at the landscape of institutional investors, they're all raising more capital and investing in more real estate. It's just announced this morning that Blackstone acquired a massive amount of European real estate, a couple $1 billion. Which, if you'd shown me a map and said, where on this planet do you want to invest? Europe would not have been on that list. I would have easily gone over and said, you know, the United States seems a little bit better. But they just made a $4 billion play. The big money gets it, especially on the private equity side, hedge fund side. They're not chasing after the WeWork IPO. Oh, I read a fascinating article last night on IPOs. I'll see if I can dig it up. IPOs are when a stock gets issued to the public. I'll give you a little hint. Most of them are losers. They absolutely all end up as losers. Now, you probably ask yourself, well, Jason, why is that important? Well, because if you've got a mutual fund, if you've got an actively managed portfolio, if you're investing in a handful of different companies that also invest their money in different things, it's highly likely that your money, whether directly or indirectly, is investing in some of these IPOs. And that's kind of scary. We get back from the break, we're going to talk more about what the big money's doing in real estate. It's Jason Bible, Texas Real Estate Radio Network.
Yeah, that's interference from the lightning.
From lightning? Okay. That was the AM feed, right? Okay. Yeah, they usually put us on the digital feed.
The what?
He usually puts us on that feed because I get an echo in there for some reason.
Sometimes I do that just to make sure we're on air.
South Coast Tax are Christian-based tax accountants and attorneys specialized in releasing fake levies, wage garnishments, and filing complex tax.
I feel sorry for KKHD. Whenever it gets like this, man, that station goes array.
Really?
Yeah. Like the transmitter's out in, I think, Alvin, Texas.
Okay.
And so yeah, like the engineer Doug, I don't know if you met him. He's gotta be out there all day today just to make sure shit don't go wrong.
Really?
And the scary thing is, I mean, I'm pretty
What's
sure.
he supposed to do? Stand up there and hold the antenna?
Well, no, I thought the same thing, but no, it's like it's all done with transistors. Now there's an antenna there.
Yeah.
But it's all done with transistors, so he's gonna be out there. But the scary thing is, yeah, he's next to a big ass fucking metal pole, and lightning can be,
Wow.
anywhere.
So if it's all so is he replacing transistor? What's he doing?
I don't know. I try to be like, hey, can I go with you like one day? He's like, well, you sure? Because it's far and there's a lot of shit. Plus, you gotta be a certain weight to like climb up that shit.
Oh, yeah.
And so he's like, yeah, but he's gotta be out there all day today. Sometimes he puts us on the backup beat.
Huh.
So he's got a pretty tough job today.
It's going to be like this for 2 or 3 days, I think.
This is Houston. It'll be like this until 2 o'clock, and it's hot as fuck.
Yeah.
I'm kind of bummed out because I can't work out today.
Oh, because you can't go outside?
Well, I swim. When I work out, I swim. But the YMCA where I'm at, it's crazy. My pool's inside, underground, but there's lightning outside. They don't let anybody in.
Huh. That's funny.
I was like, but it's inside and it's underground. What the fuck? How am I gonna die?
Surrendering your life to Jesus is the greatest decision you'll ever make. But that's just the starting line. Many of us begin our spiritual races of following Jesus with unrealistic expectations that hinder us from crossing the finish line. Every faith journey encounters obstacles. Just open the Bible. In my new book, Marathon Faith, Motivation from the Greatest Endurance Runners of the Bible, I write about how men and women of faith overcame obstacles and how you can do the same. Along with scriptural references, I include my own life experiences about endurance running. When things get tough, let God help you endure your race so you too can finish well. Order your copy of author John Van Zan's compelling new book, Marathon Faith, Motivation from the Greatest Endurance Runners of the Bible, at Amazon and at BarnesandNoble.com.
Breast cancer survivor. The United Breast Cancer Foundation saved her life. Their free breast cancer exam caught the cancer early, and it saved her life. But now the foundation needs your help so they can continue offering free or low-cost breast screening exams, saving more women's lives. Help them by donating your car, whether it's running or not. They'll provide fast, free 24-hour pickup, and you receive a charitable tax deduction, plus the great feeling you'll get knowing your donated car is going to help save more lives. Just call 800-478-6860 to set the wheels in motion. They take cars, trucks, vans, and SUVs, running or not. Call 800-478-6860. The United Breast Cancer Foundation needs your help, and your donation could literally save women's lives, helping them catch breast cancer early, like they did with my mom. Donate today. 800-478-6860. That's 800-478-6860.
This is probably one of my favorite real estate stories right now. 5 guys whose Brooklyn real estate scheme was featured on $1 Million Listing New York just got arrested. Here's the scheme they were playing. This is why you've got to be very careful with who you get real estate education from. Allegedly, they were running a short sale scheme. So they would find New Yorkers, homeowners, who were behind on their mortgage. And then they would assist them in a handful of different things, essentially negotiating with the bank. In some cases, they were buying these houses subject to, meaning they were buying the house, but they weren't getting a new mortgage. And then they were negotiating directly with the bank. Here's the fascinating thing. You sell that house sub 2, the homeowner is still liable for the debt, but they don't own the house anymore. So the article doesn't get into the specifics of what they're doing, but I have a pretty darn good idea. They were buying these houses. In some cases they were buying, sometimes they weren't. They were negotiating a short sale at the same time they were rehabbing the house. So as soon as they got title clear, they've got a settlement statement that made sense, that made them profitable, they would then turn around and sell that property. Fannie Mae, Freddie Mac, State of New York, all got really tired of the scheme because these guys were making millions of dollars. And looks like they're going to put them in jail for fraud. I think the FBI's finally gotten involved. So this is why you guys have got to be really careful with who you get advice from. Because there are folks running around telling folks, oh yeah, let me tell you how to negotiate a short sale with a bank. You can do this, you can do this. There's this land trust thing, there's a deed, and it's like, there's making money in this business, and then there's what looks like it's really bad on the surface. I mean, there's some it's best. Hey, if somebody says, hey, I can't afford my house, great. Here's a short sale specialist. You go chat with them, and here's the offer we can make on the house. But some of these real estate techniques that are taught in the hotel ballroom, in some cases, they're legal, but they sure as heck don't sound ethical. It'll be interesting to see how this case plays out, to see if there was actual fraud involved. But be very careful with who you sign up for. Lease options are another one that's a little bit interesting to study. All of these creative techniques are born out of the scarcity mindset, which means you can't find a good deal out there. Oh, you've got to use this technique, got to use that technique. Like the new thing right now in real estate wholesaling, it's been the new wave for about a year and a half now. And that is to set up these call centers and call homeowners and ask them if they want to sell their house. My favorite of these schemes, and it's completely unethical, and it's amazing the number of people that have signed up for it, is calling a homeowner. So what they'll do is they will get a list of homes. Then they will skip trace the owner. So the owner is a part of public record. So if I live on 123 Main Street, it'll say Jason Bible owns 123 Main Street. They'll take my address and my name, run it through a software program, and it will tell them what my mobile phone number is. Yes, it will tell them what my mobile phone number is, unless I'm unlisted. Meaning, I'm not listed as the property owner. Say it's in a trust, LLC, that sort of thing. The numbers, finding owners for some of that stuff is a little bit more challenging. So they will skip trace me, they'll get my phone number, and they'll call me and say, Jason, I would like to buy your house on 123 Main Street. I get these calls all the time. Now, the more unscrupulous of these folks will call and leave a message, or they will send out a voicemail broadcast. So what is that? It's possible for mobile phones to send out a message. It's almost like a voicemail email, and they'll send it to thousands of people all at once, and it shows up in your phone as a voicemail. So your first thought is, let me call this number back because I missed this call. And the voicemail will sound something like this. Hey, Mr. Bible, I'm here to inform you that your house has been sold. And you're like, what? What are you talking about? And they immediately call back. So if you haven't had this, if you're a landlord out there, this is typically what happens to landlords. You own a couple of rental properties in some areas of town that make really good rentals, and you'll get these weird phone calls or voicemails, some cases text messages. But this is the new thing in real estate wholesaling. Now, my suspicion is, and I've already seen it, the companies that provide the skip tracing services, a lot of them are really looking at the terms of service and shutting some of these real estate wholesalers down. If you've ever read the terms of service, you're really not supposed to be using these software programs like it. So they are slowly shutting these folks down. But in the meantime, you and I are getting all these phone calls saying that our houses have been sold, which are completely untrue. So if you get that phone call, that's what it is. But that's the new thing in real estate wholesaling. And I got to be honest with you, I really don't understand it. I just don't. There are so many deals out there. They're listed with real estate agents. Maybe they're pocket listings that are off the market. They are with wholesalers, some wholesalers who do door knocking and direct mail and that sort of thing. You can buy real estate from other investors. In fact, this Wednesday night, we've got the super investor meeting over at the Republic Country Club. There'll be 1,000 people there. And I can tell you right now, I guarantee you, because of the number of people out there are deals in the room. We've done deals at the event before. Hey man, you got a house? Yeah, where do you got it? All right, let's take a look at it. You have some pictures on your phone? We've bought deals there before. If you're somebody out there who's struggling, you're welcome to join the Mr. Texas Real Estate Group. But I will tell you this, there absolutely are real estate deals out there. I look at them every single day. I have a pile in my inbox sitting right now. But you got to get out there and you got to start making some offers. We get back from break, we'll talk more about what big money's doing in real estate. It's Jason Bible, Texas Real Estate Radio Network.
Tens of thousands of American retirees trust Bob Carlson's advice, but almost none believed him when he came forward with his latest bombshell, a way to collect up to 76% more on every Social Security check you get and create a lifetime monthly income stream 100% tax-free. To his readers, the idea seemed too good to be true. So Bob has made it his mission to give retirees and future retirees the full story. A retirement strategy that's fully approved by the IRS, despite less than 1% of Americans knowing enough to use it. Nobel Prize-winning economist and MIT professor Robert Merton says this strategy will become one of the key means of funding retirement in the future. So if you're concerned about having enough money in retirement, you owe it to yourself to read Bob Carlson's full briefing, The Retiree's Ultimate Secret Weapon. It's completely free. Just go to www.retirementsecretweapon.com and you'll get this blockbuster new report from America's #1 retirement expert, Bob Carlson. As soon as you log on to retirementsecretweapon.com, that's www.retirementsecretweapon.com. Attention all timeshare owners.
Okay.
Is this what you'd like to do with your timeshare contract? Do you own a timeshare and just want out? Thousands of timeshare owners are getting out of their timeshare contracts. With the help of timeshare compliance can legally terminate, tear up, shred, eliminate, trash your timeshare agreement, ending your payments forever, saving you thousands. So whether you're a victim of a high-pressure, dishonest sales agent, or you were misled with what you were buying, or you overpaid and they underdelivered, call Timeshare Compliance now for a free consultation. With one simple call, the trusted professionals at Timeshare Compliance can legally rip off your timeshare agreement and help rip off your financial suffering. You could save thousands. Call now before another payment is due. Timeshare Compliance is A+ rated by the Better Business Bureau. Call 800-319-1080. 800-319-1080. That's 800-319-1080.
So if anyone's following the WeWork IPO, it is coming down in flames, and it should. This is what they call price discovery. This thing is a complete flaming pile of garbage. And the fact that somebody thought it was worth, I don't know, like 40 billion, whatever the ridiculous number was given out is, I mean, it's bad. The bonds are taking a beating. In fact, I'm just reading the headlines here. This article just came out literally like minutes ago, so I didn't have a chance to read it. If my suspicion about SoftBank are correct, so SoftBank is the one that's doing the debt financing for WeWork. WeWork is supposed to be a real estate play. They have commercial office spaces. They're gorgeous, by the way. I've been in a couple of their facilities. Commercial office space for, let's call it small tech startups, small business. It's kind of like a big small business incubator. You can rent the desk for the day. You can rent the office. Very similar business model to a handful of other companies that do this, but do it well. And by well, I mean they make money. WeWork does not make any money. Now, their claim to fame is they have some kind of, quote, proprietary technology to maximize client value, or whatever they call it in corporate doublespeak. Reality is it doesn't really work that well. So if my suspicions about SoftBank are correct and it's worth a fraction of what is invested, then Saudi will have lost nearly as much as it spends on defense. So Saudi Arabia is a big backer of SoftBank, and it looks like just on this company alone, they're going to lose a ton of money, which is great. That's what you want in a marketplace. You've got to let the poor operators fail, and that's exactly what's happening here with SoftBank. So we'll see when this IPO actually gets rolled out at some point, but it's not looking good. Not looking good for anybody right now as it relates to the WeWork project. I mean, I read some stuff yesterday, posted it on Facebook, just some of the ridiculous things they're saying about how that'll turn the company around. I'm like, come on. And it's all this, corporate governance nonsense. We'll do this. We'll make sure there's a woman on the board. It's like, it just, none of that matters. Like, does your business model actually work? And the way theirs is designed, it does not. And what's scary is for us real estate investors out there, we're competing with the WeWorks of the world who have piles of cash to burn on stuff. Rob mentioned yesterday, nobody knows what Zillow does. I really don't. I've read some really interesting articles about Redfin lately. There's some fascinating data out there about iBuyer. Everyone likes to talk about market disruptors. The challenge is, are those disruptors truly profitable? One of the reasons we joined Keller Williams over any of the online digital brokerages is because when Rob was sitting at their corporate headquarters in Austin, they had a timeline up on the wall. And he literally could see all of the recessions that Keller Williams survived. Not only survived, but grew through those recessions. So in any marketplace, there's all kinds of disruptors, especially those related to technology. But the reality is that, are they simply disrupting their marketplace because the marketplace is continuing to increase in value? Or are they real disruptors, and when there's a slowdown in the marketplace, they're able to survive or thrive? Everything sounds really attractive when the S&P is jumping up 10, 15% a year. But when all that stuff stops and the IPOs stop and people stop paying ridiculous money for things, you start really looking around saying, okay, well, who's really creating real business here? Who's creating real value? I'll tell you right now, that was one of the hardest things as a mom and pop investor as we were trying to invest our retirement. When you're looking at the landscape of what's available to you in the marketplace to invest in, how do you make enough money and secure yourself from the downside? I think the big problem, and if you guys want some fascinating reading, read what ETFs are doing to your portfolios. This passive investing in the stock market is driving the market to continued new highs for no other reason than the fact that you've got to put the money somewhere. It's really insane. You've got to put the money somewhere. So where are people putting the money? Doesn't really matter. They just put it into an ETF, and the ETF kind of figures out what the mix is for the day to buy Apple and Amazon and Microsoft and a handful of other companies, which is the same portfolio that everybody else has out there. So what's the real value of Apple? What's the real value of Amazon, Microsoft? What is the real value of these equities that everyone's buying for retirement? Look at PE ratio. I mean, anything related to the stock market tells you that it's in scary high territory. And the only distinction I can make is the fact that we're just pouring so much money into the system that's what's increasing the value. It's the guy who's buying at the next highest price. You're done with Google at $1,000 a share. Somebody's willing to buy it for $10.50. What I really like about real estate, especially buy and hold real estate, which is mostly what Rob and I do, is I can buy a hotel, I can buy a single family house and turn it into an Airbnb, I can buy a single family house and do long-term rental, I can buy a small apartment complex, and it makes money today. And you know what the amazing thing is? There's no IPO that happens 2 doors down from my duplex where there's a brand new duplex that gets put up. My stock, if you will, my inventory in real estate is finite. Until they figure out 3D printing for houses, the Fed is not going to decide to print another duplex next to my other duplex. The hotel we have under contract in Surfside, no one's going to build, actually there's not even enough land to build another one. No one's all of a sudden going to build another property right next to mine. And they can't do it out of thin air. Most of us out here are not trying to make $1 billion. Trying to make a couple of mil, 5-10 mil max. That would take care of most of folks under 40 years old to retire. Need somewhere between 5 and 10 million. In fact, I'll give you the magic number, and I haven't talked about it in probably a year. It's called the rule of 25. Whatever you spend a year, multiply that by 25, that's what you need in assets to retire. You and your spouse make $100,000, you spend $100,000 a year, you need $2.5 million to retire. You spend $200,000 a year, you need $5 million. It's that simple. But for me, I'm not putting it anywhere other than real estate. Well, unless my employer does a match. But other than that, everything's going into real estate because you can't print more of it. Jason Bible, Texas Real Estate Radio Network.
This is a Lyndon Jocelyn commentary.
From the headlines, drone attack on Saudi oil is seen as a Pearl Harbor moment. Yemeni rebels have claimed credit, but the Trump administration suspects Iran is to blame. In any case, it's Muslims attacking Muslims again. Whites need not apply. Campus Science and Tech Symposium to feature only scholars of color. Williams College in Massachusetts is a private school, but if it receives one nickel of federal money, the Justice Department should land on this racist outrage with both feet. Biden struggles to remember the word escalator. Well, the man is so old, but it's still kind of a new thing to him. The world must transform food production or face unrest, scientists warn. Done.
called the Green Revolution, and it was a done deal by the late 60s. Democrats haven't given up on smearing Brett Kavanaugh. Now it's something he supposedly did at a party in 1983. Hillary lost, guys. Give it up. I'm Lyndon Jocelyn, and that's the way I see it.
Lyndon Jocelyn commentary.
Brought to you by Humble Amco, 1904 FM 1960 Bypass East in Humble. Folks, I finally get to endorse a person that I've known for decades. Get ready to put his number in your phone. Jay Streckfuss and Humble Transmissions, an Amco dealer. For your car or truck, or if you manage fleet vehicles, call Jay Streckfuss at Humble Transmission, 281-446-0862. That's 281-446-0862. For brakes, AC, drivability, and transmissions, of course, call the guy I take my own car to, and believe me, you'll see why this is my first and only choice. Personal care and the best warranties, 281-446-0862. Tell them Lyndon sent you.
America's veterans are more than a source of pride. They're a source of strength. When our veterans thrive, our communities thrive. With your support, our veterans can get career and education opportunities, as well as benefits they've earned.
Looks ugly outside.
Hello, I'm Congressman.
Is it raining still?
Hell yeah.
Join me in thanking our nation's
It looks like a little street flooding right here. I was watching the lights. They were coming up to that intersection.
I'll check on that.
Like right now?
Yeah.
Looking at the rain right now. I've got to go over to the Quest Trust building. Our office there is high atop Quest Trust, the crown jewel, the third floor there, Suite 370. And I am not looking forward to traversing from Sharpstown to Katy. It is going to be a mess. Our office in the Heights isn't quite set up yet. I think the studio is maybe built. I'm not sure. We'll find out today. But we're looking out the window here, and there's some street flooding already. There's some folks that it's going to be a long ride to work today. So where's the big money in real estate? Or where's the big money going? It's going into real estate. It's pretty simple. They figured it out. Everybody else has figured it out. This is not like, oh, Jason, it's just like 2007. No, it's not. There's a chart I show anytime I speak in front of an audience. And it is the most important chart in real estate. And it shows what are called new housing starts, starting in about the year 2000 to about the tail end of 2018. I have not gotten an updated version of this chart. But here's what it says. It says that new housing starts, meaning building new properties for residential purposes, that's apartment complexes and single-family houses, is down 40% from its highs in 2007. Meaning the construction sector for new houses, new apartments, has yet to recover from 2007. One of the things you guys have got to remember when the housing crash occurred, it was people getting loans that could not afford them. There was a recession, which made that even worse. And the third thing is we had so much housing. There were houses, developers were just getting thrown piles of cash to build entire neighborhoods. That's gone. Will it come back? Maybe. But not at the affordable house price. Because like I've said before, there's virtually zero affordable housing being built in the entire country. Zero. And that affordable house price point is where most of your rental properties are. So that little house in Katy, Texas, that you bought 5-6 years ago for $110,000, if it's not a $200,000 house now, it's pretty close. Why? Because there's no new supply. You can't print a house. China can't decide to put $15 trillion in real estate on the marketplace. They just can't. Thanks for listening to the show, guys. If you want to join our mastermind or our real estate club, just shoot us a text, 281-401-9008, 281-401-9008. Rob will be on tomorrow. Ooh, we're going to have a special guest. Eddie Gant will be here with us. We'll see you guys then. Thanks for listening, guys.
Solution Center for you, a family member, or a loved one suffering with diabetes.